Good evening, everybody. We can take a quick look at the markets. As we can see, when they opened it higher for a while there, going into the close, it looked like it was going to close up 140 points. And then they continued to turn it around. So this all kind of confirms the fact that we're still in a downtrend. But notice the pattern in the Dow or in the NASDAQ. Wave 1, wave 2, wave 3. So a J-hook pattern can either have a rounding top or it can be a wave 1, wave 2, wave 3 J-hook, or a wave 1, wave 2, wave 3. Now, a lot of people ask, well, does this have anything to do with Elliott wave, with the waves? And the answer is no. All we're looking at is the fact that prices move in waves. We can identify, based upon signals and our indicators, where another wave is starting because they broke this level or broke this level. So it doesn't matter what you're trading. Now, I trade hogs during the day. As you can see, you've got a wave 1, wave 2. So when we see a sell signal and it starts selling off, where should we anticipate our first target? This level. So the fact we had an evening star signal rolling over, and here's another, I'm going to just jump into a bunch of observations as we go along tonight. If you're in an uptrend and they pull back and they start the next uptrend, and in the next uptrend you see a sell signal, before you get to that high, that tells you that trend is over. They're going to start rolling it over. So anytime I can see the projection of a J-hook pattern, in this case it was much more enhanced by the fact that they gapped down below the previous day's open, doing kind of a kicker signal, trading off through the, staying below the T-line. Well, that's why we anticipate a J-hook pattern. And if we can anticipate a J-hook pattern, then we have a pretty good idea what the expected results will be. Then we're going into wave 1, wave 2, wave 3. Down here, same scenario. Now it becomes wave 1, wave 2, wave 3. Especially if it opens lower tomorrow. That's confirming that they're not holding at the 200. They failed at the T-line. Now we're looking at wave 1, wave 2, wave 3 to the downside. So that's nothing, that's about the extent of analyzing a J-hook pattern, is a wave 1, wave 2, and then it starts hooking. So there's two targets. Your first target is right here. I mean, they're coming back. We want to see if it tests this level. Obviously, if it tests this level and bounces, what's this become? A double bottom. If it goes through that level, what's our probability factor at that point? Wave 1, wave 2, wave 3 being the same magnitude as wave 1. So that's the big benefit of knowing what a J-hook pattern result is. That wave 1 and wave 3 are usually about the same magnitude. So with that calculation, or that anticipation, if we can see that it's performing, there's a bearish Harami right at the 50. It's performing. Hold on. All right, so wave 3 is either seeing whether this is going to be a double bottom or going into a wave 3 of that magnitude. So this allows you to be prepared for what should be happening. Again, a lot of people ask, well, what are the best patterns? And the answer to that is the best patterns are the ones that are working currently in whatever market conditions we're looking at. Sometimes it's a bullish fry pan bottom. Sometimes it's a dumpling top. Sometimes it's bearish J-hook patterns. Right now, we've got bearish J-hook patterns. That seem to be working. XPO, wave 1, wave 2 kind of sideways, but you can see where it started rolling over, except for today. But I'd still be shorting this one on any weakness, because that still gives you the visual expectation of a wave 1, wave 2. If it breaks down, looking for wave 3. So you can have a wave 1, a wave 2 that goes like this or like this. So think of what the investor sentiment is when they hit a move like this. You got people covering short positions. It looks like they're trying to buy, but then when they fail, everybody can see that they failed, and that's what starts your wave 3. What percent of the time does wave 1 equal wave 3? Ron, a big enough percentage of the time to know that wave 1 and wave 3 usually equate to each other. Now, does that necessarily mean wave 1 and wave 3 will be about the same? Not necessarily, but at least it puts you in the direction of expecting that type of price move. And then when you get to the same magnitude as wave 1, down here in the oversold area, doesn't mean the downtrend's over, but it just gives you a little bit more of alert to say, all right, it's moved wave 1, wave 2, or in the area that's about the same magnitude as wave 1. I want to be a little bit more diligent here, watching for a potential reversal. What did I just do? Okay. So PayPal also makes this very simple as far as an entry strategy. Wave 1, wave 2, morning star type signal, but it didn't confirm. Tried to get back up, didn't confirm. By about this day, when you have a kind of a kicker signal, you can see what the potential trajectory is. There's your setup for a J-hook pattern. Then if it breaks this level, that's pretty good confirmation that this is not going to be a double bottom. So this is where you improve the probabilities of knowing that maybe wave 3 is now in progress, especially the fact after the fact that it didn't hold at the previous low. Now, as Jim was saying, it's the probabilities. The reason we're recognizing patterns is because the probabilities pretty much indicate this is the likelihood. However, like anything else, whether it's sell in May, go away, or Santa Claus rally, or any, what do I want to say? Any expectation, I'm not thinking of the right word, anything that is anticipated in the markets based upon previous past or previous history, you can view what everybody else might be expecting, but you can be more precise in your analysis based upon what the actual charts are telling you. So that's why we want to know what patterns, what signals, what breakout levels confirm a pattern. All that information just puts us much greater in command of our trading versus trying to expect or listening to what everybody else is preaching. I don't know when the time frame was, but the time frame when I realized charts and not anybody else, my trading improved dramatically. So here's kind of a match, wave 1, wave 2, kind of took the wind out of the sails of a wave 3, except notice what happened on this bullish engulfing belt hold. It failed. Now we can see a wave 1, wave 2, wave 3 J hook. Now would I be shorting this one? I could have, but if it comes down through this level, meaning opening lower tomorrow, what can I expect at that point? Now I know my wave 1, wave 2, wave 3 is being confirmed. Wave 1, wave 2, look at all the evidence right in here that they weren't taking it back up. Bearish left-right combo at the T-line. Tried to take it up off the 200. The next day they failed. So what should we see being attempted here? You can see the rounding top, that if they start trading lower, what's it telling us? Wave 3, because we can see immediately that the support level that everybody was watching is now breached. You can stay short on this one with the expectation of this type of price move. And when you see it at levels that are very obvious as a resistance level, like in BABA, now you can pretty much see that J hook pattern. Where would it really confirm? Right here. So where could you be shorting? You could have been shorting here with the expectation it's going to be moving in this direction. Or you could be shorting here, knowing that this level did not act as support. So would I be shorting this one tomorrow? Wouldn't be afraid to, with the idea that we're in a downtrend. We can expect wave 3. So just watch a little bit more diligently if it trades lower and hits this level, or if it goes through that level. So recognizing a signal or pattern setting up just puts you in that much more command of what you should be looking for and what you should be doing next. Roblex came back up, rolling over. How far do we think this could go down? This magnitude. Now again, does that mean it's going to do that? No, that's what our expectation is. But what is the most important criteria when we're analyzing the signals and patterns? It's the signals and patterns. So if all of a sudden we see a bullish engulfing signal here, that's probably telling us, well, maybe we're not going to be in a wave 3. We better see what it does after that signal. V-cell. Wave 1, wave 2, evening star, hanging man type signal. Except today it popped up and did a doji at the previous day's open. Oh, they report earnings tomorrow? Okay. So if I was short, knowing that they gapped up to the previous day's open and did a doji, what's the next signal we might be anticipating? A bullish flutter kicker signal, which tells me if I was short and I saw this, what's my strategy? It better open lower and trade lower to stay in it. If it opens positive, you close out the position. If you're doing a vertical put trade and the stock goes through the bottom strike price before expiration, do we close out immediately? I think we've reached the limit of the profit. No, that is not true, Andrew. What happens is you still have a bid and ask, or you still have a price based upon the intrinsic value and the time value on both sides of that trade. Trying to think of one. So let's say hypothetically a stock is trading at 50 and you think it's going to go down to 45, and you could buy a put spread where you buy the 50 and you sell the 45, and your net is $1.80. Let's just say that. Oh, there, okay, Roblex. All right, I'll check that. So now, let's say you bought those puts and they expire in what is today? Tuesday. Not this Friday, but the next Friday. So there's about 10 trading days. All right, and all of a sudden that stock drops down to 42. Well, you're still going to have the time premium on both sides of that trade. So it might mean that if it falls down to 42 and you paid $1.80, well, now maybe that price goes up to 220 because there's still time premiums in both sides of that trade. Where does it become the optimal price? On expiration day. Because no matter what the price is, as long as it's below 45, the difference of closing out your 50 and buying back your 45 is going to be a net of $5, or theoretically it should be on that day because there's no time premium left. So just because the price moves down through the lower strike price doesn't necessarily mean it automatically goes to $5. Because you still got the time premium built into it. Yes, and the volatility premium built in there. I'm going to check on Roblex. So where did it close on the regular hours? All right, so after the bell, I only can see what it did. It dropped, then came back up, so it's just kind of hovering in that area. So it's a little bit lower than where it closed. So that still makes for a wave 3 to the downside. Yes, and that's the other side of what you want to do as far as taking profits. So let's say the price does go down through the 45 level. It's trading at 42. And then over the next week, it's trading at 41.5, and the price of that spread now goes to, I'm just going to pick out a figure, $4.60. Now you look at it and say, all right, do I want to hang on to this for another 4 days to expiration for my 460 to go to $5 or another 40 cents? And so that evaluation you make based upon, does it look like the market is bottoming out and prices might go back up? Or for some reason the stock price might be bottoming out and ready to bounce back up. So at that point you calculate, all right, do I want to take my 460 and go on and find another good trade, or do I want to hold on to it for another 4 days to make another 40 cents? So that becomes your value of whether to close out the trade or not. All right, so in these, that means their outlook is pretty negative, which means if the market's still heading down, more than likely, with a negative outlook, it's going to be heading down. Well, let's take a gander here. So it closed at so it closed at 23.18. And after hours, that's something wrong here. Oh, that's why. Let's try this again correctly. Regular hours. Regular hours showed it closed here. Is that right? At 23.18. All right, and after hours, well, for crying out loud, it's not showing anything. Or did I just do that wrong again? Okay. Doesn't show that it's traded down there. So here's the bid and ask. Maybe there's none traded. Yeah, so it's down another dollar. So this is going to gap down. Based.
My name is Alan Reamer. I'm with Carrington Mortgage Services. Carrington is the current servicer for your mortgage. Just reaching out to you to let you know we are reviewing accounts. I see something in your account I'd like to discuss with you. If you get this message, please return my call. You can reach me directly at area code 443.
Okay, now I forget what I was doing. B-cell, wave 1, wave 2, wave 3. So this definitely needs to open lower tomorrow. IPI, wave 1, wave 2, and what becomes more significant at this level? Well, the failed at the T-line, the hanging man signal at the 200, a lower open, which told you they weren't coming back up above the 50 or the T-line. So you can pretty much calculate that if they start selling off, not only do we have the prospect of a bearish J-hook pattern, but we can also, that was a call from one of the houses Sandy owns out in Washington State for her son, and they keep calling and saying they can improve the mortgage rates. So right now, this looks like a bearish J-hook. You could start shorting this one on weakness. So where's your next likely target? Wave 1, wave 3 should take you down here to the 200. Unity. I hate when I do that. Kind of a wave 1, wave 2. There's your hanging man type signal, wave 3. So the reason you want to be visually recognizing patterns is because there's two strong elements to a pattern. One, the probabilities of it moving based upon what a pattern usually does because of human nature. You've got a high probability you're moving in the right direction. And two, you can calculate the magnitude of the move, which puts you in advantages in two respects. If this is a 125-point move, well, I doubt if this would be 125, but it's telling you there's probably a lot more downside. Oh, Unity is down big after hours. Let me take a gander at that. Why is this not working tonight? Show regular hours. Oh, I know why it's not working. Something just stopped the... Ow. So, show regular hours on the daily. So that was regular hours on the daily. And after hours, down here. So here's another illustration, getting off track some more, is the fact that when you have a dumpling top, what do you think the direction of human nature, what the investor sentiment is? It's bearish. So that means any little tweaky bad news can just get everybody already nervous or bearish. Any bad news will just say, get me out of all this. This is why we look for the patterns and the expectations of those patterns, because they're a buildup of investor sentiment. All right. Somebody was asking what this is as far as my desktop. This is Lake George, New York, which has a lot of famous stuff. If we stay around long enough, remind me to tell you about Rogers Rock on Lake George. All right, let's get back to business here. So coin, yeah, it was up here at 200 and now it's at 72. Why are they selling off? Have no idea. We don't need to know. Let me do this. So you can see where Carvana came from back in August of last year. 375. And today it closed at 36. So to answer that question, why are a lot of these stocks selling off? We don't need to know that. All we need to do is analyze what they're doing. Let's see. If your history with candlestick signals is 70% correct, what are the typical things that led to the 30% of the times things didn't work out? That's the percentages. That's the probabilities. Or a better way to say it is, no matter what type of trading platform you have or trading strategy you have, even the best in the world, which so far I've found candlesticks to be pretty much the best that I've come across in the last 45 years of trading. Now I forgot what I was answering. I was reading and... Oh, so reality says not every trade, every signal is going to work. And when I finally realized that 70% of my trades did work and 30% of my trades didn't work, I assumed I was going to make good money based upon those 70% of the trades that are working. However, reality says you have to know when that trade is not working So everybody always tells you cut your losses short and let your profits run, but nobody ever tells you how to cut your losses short and let your profits run. We can make simple visual analysis of when a trade's not working. So not only are we assuming that our trade is going to work 70% of the time, but we also have to be face reality to say about 1/3 of the time it's not going to work. So I have to recognize right away when it's not working, close it out, and it's not my fault, meaning it wasn't my analysis. Sometimes the market turns on you. Sometimes there's an announcement out of the blue, and sometimes the bullish signal was a false signal. So you don't take it personally, which I always did. I kept thinking, man, what am I doing wrong here? I should be able to get this stuff right more than I am. But then when I realized that 1/3 of the trades weren't going to work, I realized close it out and move on to something else. Okay, so I forget what I was illustrating. Oh, I was illustrating Carvana going from 375 to 36. Where were we? Did we do coin? Oh, did somebody say coin was down another? Yep, it's down big. So there was your bearish J-hook pattern. That is confirming. Oh, you would think after all these years I could read my own handwriting. Bearish J-hook pattern. So what's the assumption of this chart? You're in a downtrend. I mean, that's visually obvious. So 30% of trades Bill, I see the question, but I don't understand the question. Yes, I expect that at least 30% of my trades won't work. I'll see a flip above. All right. So, first of all, what's our assumption as far as this trend? We're in a downtrend. Every time it hits kind of a resistance level or support level, it goes through, comes up, hits the T-line, and we can see immediately there's our failure at the T-line, a bearish harami. So if we look at this chart and say, all right, it doesn't look like it's going through, if I was ready to buy this chart, what would I wanted to see here? Positive trading. When it did a bearish harami right here at the T-line, what can I instantly assess based upon that information? Right now it's not going through the 50. So it looks like it's stuck, but we'll see what it does from here. Next day it trades lower. Now what can we see happening? Well, they aren't going through the T-line. We're still in a downtrend, and it looks like they're starting a bearish J-hook pattern. Could I be shorting this? Definitely. The level that told us that this was where they could bottom and do a double bottom and maybe bounce up, they gapped down. So now what can I assume? Wave 1, wave 2, wave 3. OLO. Wave 1, wave 2. If I was looking to buy this, so here is that failure prospect. Kind of a bullish engulfing signal. Kind of a morning star signal, close above the T-line. It opens here and starts trading positive. So stochastics coming up, I'm going to be a buyer. But where would I have my stop? At where it opened, because if it came back down through this level, what was it telling me about our bullish trajectory? It's not there. Close out the position. Now I'm going to rhetorically ask what our emotions were telling us if we had to stop out here, because I went through this many times myself. I said, oh man, this was a good trade and it came back down through here. What was there something else I could find that told me I shouldn't have been in that trade? No, I don't see anything. Man, I did something stupid. Well, I finally realized after years of trading that there's nothing you can do about that. 1 out of every 3 trades is not going to work. So if it doesn't work, close it out and move on to a trade that looks like it is working. And then you can see where the level is, that if this is starting to roll over, what type of pattern are you expecting? Wave 1, wave 2, possibly a wave 3 if it gets down through this level. The next day when they open and start trading down, what's that indicating? Our J-hook pattern is working. So recognizing a pattern is just as important as recognizing a signal. The signals are just the tidbits that make up a pattern. So look at this one, Vetco. Where would you have started going short? Look at your bearish engulfing signal that closed below the T-line, started trading lower. Where would you have covered your short? Probably right in here. But then remember our observation that if you see something gap down and close at the low end of the previous day's trading, hold on, I'm got the pirate team on and they're now losing 11-0. Oh man, it makes you. If it closes at the previous day's open, what should that tell you immediately about the bullish sentiment? It's not there. Close out the trade. Anytime I see something close at the low end of the previous day's trading, I close it out. What's my worst case scenario? They open it and trade it positive, I can always buy it back. But the probabilities say if the bears have enough strength to close it back at the previous day's open, close it out, because that's not a good trade. Then there's your bearish doji sandwich after kind of your bearish harami that closed at the low end of the range. Where would you start shorting it? If it came down through this level. So it is kind of a signal. This is a signal. It's a bearish harami, but even more bearish is the fact that it closed down here at the low end of, or at the open of the previous day. So whether you remember that or not, the observation or the thing that you should remember is when you see something gap down and close at the low end of the previous day's trading, that's not a good bullish sign anymore. Close it out and find something better. Or if you're thinking you're in a bearish trend, start watching to see where a bearish J-hook pattern will confirm. Obviously, we're going through a lot of the bearish J-hook patterns because this market is full of them right now. This is why the T-line is so effective. There's your wave one. There's your basing. Doji, doji, inverted hammer, bullish engulfing. Doji, hanging man, right smack dab at the T-line, and then a failure. So what did that tell us? They weren't going up with any great, I don't say, resiliency. And as soon as they hit the T-line, they did another sell signal, the hanging man, and sold off. Where would you be going short? Trading below this level, because now you've got wave one, wave two, wave three. What if it closes below the previous open? Close it. That's still telling you the same thing. You don't want to be in a trade where, let's see if I can find one. Yeah, you don't want to be in a trade that's closed back below the previous day's open. Even though it might not be a sell signal, it's definitely an indication the bulls are not in control. T-line. This is why you always watch to see what the T-line rule tells you when you're at a technical level. I was going to say that everybody else can see, but nobody else sees this. We can see it because it's technical level on our charts. So if I see a doji sitting right on the T-line, it better open positive the next day. If it opens lower, close it out because they didn't get up through the T-line. Now, what's my next trajectory? What? If they're closing right here, what can I see developing? A bearish J-hook pattern. And why is that bearish J-hook pattern a lot more likely? Because you're in a downtrend already. You're failing at the T-line, and now you're coming back below this level. Get ready for wave three to the downside. So even on something like this that's fairly ugly, notice you got kind of a dumpling top, then almost a belt hold type signal. I'm going to flip to gaps here in a few minutes. But the fact that they gapped this down and then couldn't bring it back up and started rolling it over, now you can start seeing the bearish J-hook pattern. And where did this close today? More than halfway down the candle that told you the bulls might be in control. You could be shorting this one on weakness tomorrow with the expectation you want to see it get down through this level. And that also coincides with what do we expect coming out of a dumpling top? A strong move to the downside. ASTS. This is why your first learning is the signals. We had a strong bullish doji sandwich right here at the 50. If I had bought on this day with the expectation of a doji sandwich, what did this bearish harami tell us? The bearish harami tells us the buying has stopped. I would have closed this one out. Where would I have bought it again? When it came back up through that level, which obviously it didn't. So now I see a failure. If I'm watching this one, I'm ready for it to come back up through so I can rebuy it. Bearish kicker type signal, a little hanging man type signal, stochastics rolling over. What can I see setting up? Your bearish J-hook pattern. Now, you could still even be shorting this one on weakness tomorrow. Obviously, you've got a bearish J-hook pattern. And this is observe the obvious. Where did your doji end up? It hit the 50 and failed. Well, if you were long on this one and you held on to it, what should this do the next day to stay in it? It needed to open positive and trade positive. The fact that they gapped it down told you if you're long, get out of it immediately. Now, what's that kind of telling you? I've got kind of a J-hook pattern setting up. Oh, if I shorted it here, okay. If I shorted it here, what did I need to see? Needed to see another bearish day. Or, if I didn't buy it here, let's make this real big. If I didn't buy it or short it here, but I have a strong evening star signal J-hook pattern, where would be a very good place to enter this trade if it opened positive today? When it came back through either this level or this level. Because what color would this candle be? Another red candle telling you the bears are still in control. Yes, even if the stock does not close below the T-line. Remember, we're not trading the T-line. Always keep in mind that the number one criteria for your analysis is what signal are we looking at, or what pattern are we looking at. Now, everything else becomes a confirming indicator. The T-line just happens to be a very strong indicator. But there's another evaluation too. If we're sitting here watching this trend in the market and something sells off but doesn't yet close below the T-line but does a sell signal, just put 2 plus 2 together. The market's selling off, that did a sell signal, it didn't close below the T-line, but what's my prospect of that trading higher the next day if the market's still looking like it's selling off? Not very good. Let's move our money to cash or find a better trade setup. Okay, that's J-hooks. I'm trying to think of, I had some J-hooks that worked well in the past and I can't even remember which ones they were. So here is the other important element about human nature. When you see something gap down, assume that selling strength is going to have a lot of follow-through. Ron, it depends on what your trading time frame is, or your trading strategy. If you're trading intraday, you're not using a daily chart. You're probably using a 10-minute or a 5-minute or a 15-minute chart. If you're a swing trader and you're holding on, it doesn't matter what it's doing intraday. The only important factors that the Japanese rice traders utilize is where did it open and where did it close. Everything in between is noise. So you have to decide, I am buying put options currently. Fine. All you have to do now, though, is be a little bit, a little bit aware of the fact that we're pretty much in the oversold area. So any puts that I am buying at this point like on that big bearish engulfing signal on Crocs, and it's down here in the oversold area and the market's trading lower but pretty much oversold, I'm buying put spreads versus buying puts outright. Trying to think of the other ones. So PayPal, for example. I'd probably be buying, because the market is so oversold, just to mitigate the risk a little bit, I'm buying put spreads. Or things like, this is my big trade for the month, or one of my big trades anyways, Carvana. Now this, again, this stock's gone from 375 to 36. Where could it go? Now it could go, I think, way back here somewhere. It was down in the, oops. It was down to 24 before it started its uptrend. So could it go to 24? It's been oversold. So after a while, I started taking good profits off my puts. I think I had the 5250s, and so they had big profits in them. But I still think it's going down. So instead of buying more puts, I was buying put spreads. I forget what I did, the 45, 35s, because they were, you got less money exposed, and you're down here in a much higher risk area. All right, so we got way off track there. So again, anytime you see that gap down, you're probably going to have more follow through. Because what did that gap down illustrate? That there was a lot of negative pressure. We saw that in Netflix. Darn, I just had a flash. I was trying to remember one of the stock positions that I made big profits in, because it did a gap down and then headed down further. How do you trade something like Upstart? Down huge already. Well, you have to decide what your strategy should be from this point. I don't know where Upstart, oh, it came from. Looked like it was, well, way up above. So it came from 400 and is now trading down here at 23. You didn't talk about Netflix. Well, I did talk about Netflix. Told you that when it sold off. So on this one, you have to decide how you want to trade this. If you think it's going to go lower, maybe you do some spreads on this one. Netflix, if you're short, remember why you would be short? Because it did a bearish harami here at the 50 and traded lower. We're not even halfway done, and we're already at 9 o'clock. Okay, thank you, Bill. Yeah, I was trading at 22 back then. So on Netflix, how would you trade this one? Pretty much that if you happen to have been short up here, and then notice what type of signal you had, that's your bearish kicker signal, but the gap down told you more than likely there's still going to be a lot more downside. When they gap down, that's because the investor sentiment has changed greatly to the downside. There's usually going to be more downside. So I'm showing these because you might not want to do every type of trade strategy. Bah humbug. That one, I don't know why it's not coming up here. You might pick out a few strategies and learn them very well. Notice the gap down. What direction is this going? There's your bearish J-hook pattern. But the probabilities are you're still in a downtrend on GMED. Lumber liquidators. Your doji best friend gap down. through this area. Implies there's not a lot of bullish sentiment or a lot of bearish sentiment. So that's how you use your knowledge of the signals and what happens to human nature, or what's involved in human nature that creates these big moves to the downside. Is when they gap something down, that means they want to be out of it, or there was news that was very negative that people aren't going to come back for a while. ITSE. Is this where this one closed today? Let me take a look. So what type of signal is that? That's a kicker on this one, definitely. So this is where I think, did somebody say this was earnings? This is where you go and see if those earnings and their outlook is going to be strong. That's your rare process. But that could be much stronger to the upside. Vincent. Where are you seeing a kicker signal? The doji. What is a doji gap down? Bearish best friend, yes. So what's the difference between a bearish best friend and a kicker signal? A kicker signal would have a big green candle, and the next day they gap it down and go down with another big red candle. A best friend signal is a doji, followed by a gap down. They still have the same impression. There's a lot of bearish sentiment, or a lot of sentiment change. So there's your inverted hammer type signal. On fold with a gap up. I don't know why I had that in there. Let's see. These had a reason. There's your kicker type signal on APPN. Another one where you use the rare process. Vincent, no, I'm just illustrating. They still both, the bearish best friend and the bearish kicker signal are both strong signals. Let's see. FGEN, a bullish kicker signal. So, would you be going after these? If you don't like shorting, or if you think the market is, yes, Bob, all these sessions are recorded. If you would rather be long, you think the market's nearing a bottom and you want to find some long positions, the kicker signals are the ones to start looking into. This is a bearish kicker signal, which implies there could be a lot more downside. Okay. And when you see a big bearish signal, the bigger the signal, the more compelling you're in a downtrend. The bigger the signal, the more compelling the downtrend. So that's something like that. There's your bearish belt hold. This is the results you're going to get, or expected result. So I'm pointing this out because I like to find these, because that shows you there's a drastic change of investor sentiment, and usually it's going to have a strong force to the downside. So here's a bearish J-hook pattern in the making. So what is your risk reward on this one? If this opened lower and started trading lower tomorrow, I'd be shorting it. If it opened and lollygagged in here or came back up, if it opened positive and traded positive, what was it telling us about this level? It's acting as a support level, not a breakdown level. So very simple strategy. If this opens lower tomorrow, the market opens lower. Let's see what the market is doing right now. It's down 28, no big deal. This one opened lower. Forget what one it was. What can we assume? There's wave 1, wave 2, bearish J-hook pattern just starting. Why is this more attractive? Because this one's just starting. We're not buying something that's already moved down 5, 10, 15, 20%. So this was another example of a wave 1, wave 2, wave 3 on 4. And Etsy. There was wave 1, and there was wave 2. Now, that's not what I wanted. Etsy. Look what created this bearish J-hook pattern. Here's your kicker type signal. Remember, anything that opens below the previous day's open, I would call this a kicker type signal. Still a good bearish signal because this candle isn't real huge, but the fact that they gapped it down below the previous day's open, what did that imply about our downtrend? The bears are still in control. Okay, I guess that's about all I got for tonight. I want to find the ones that are just rolling over. Or things that have higher probability trade setups that might be going lower even though the market's already oversold. I probably won't do a double line tonight since we've already, we can do a double line, but the double line will be one request. How's that? So I'd still be shorting PayPal. On a lower open, because that would additionally confirm that we're in wave 3 to the downside. Is that a head and shoulders? No, not really. Usually a head and shoulders is at the top. This is just more of a bearish J-hook pattern failure at the 50. So first assumption, you're in a downtrend. Second analysis, when they bought it, they came back up to a observable resistance level, and what did they do at the observable what did they do at the observable resistance level? Here's kind of your dark cloud gap down. They failed at the 50. Telling you this is more likely what you're a broken shoulder. ExxonMobil, that's a toughie because it's sitting right now on the, or just above the 50. If I was shorting this one, I'd probably, if I was not short already, I'd short it if it came down through today's low. Okay, how many people do we have left in here? All right, if we want to do the double line, Jim, everybody just one request so we can get out before the Pirates game ends. What did I just do there? UVXY. I don't know what to tell you there. Right now, all you can do is stay long, but you don't want to see it probably trade back below today's low. Facebook, you want to stay short. Notice, again, where you would have closed out any long position when this closed back below the open of that candle. QCOM. That's not a chart that I'd probably want to be long or short. If I was short, use today's open as your stop. It shouldn't come back up there. It wouldn't be a buy. It would just be a junky chart at that point. EHTH, that's still got the prospects of doing a fry pan bottom. However, a little bit of a warning that they came back to the T-line, but they didn't close below the T-line. So to stay long, it has to open positive and trade positive. If it opens lower, close it out. It's failed the fry pan bottom as well as failed at the 50. OMI. Another one that if you want to go long, which I wouldn't do in this market, that's still not a very, you could buy on a positive open, it's just not a very dynamic looking chart. As a matter of fact, it's not dynamic enough that I'd want to go long in something that doesn't really look great in this market heading lower. Olin, there's your kind of your doji gap down failure at the T-line. I would suspect there's your first target and there's your second target fill in the gap. AUPH, that's kind of a junky chart. If that was earnings and they have a good outlook, you could buy on positive trading. It's not a reversal signal. It's just a big up day. So if I had my druthers, I wouldn't be paying attention to this one. There's much better charts out there to be going after. Apple, kind of a junky chart, but you can see what the overall direction is. As long as it stays below the T-line, assume you're still in a downtrend. Las Vegas Sands, stay short. Wynn Resorts, stay short. Oh, there was another one, and I forgot what it was. Oh, well. U.S. Steel, stay short. Golden, that's a junky chart. I would probably not be long or short this one. We don't know which way this one's planning on going. Philip Morris. Yeah, you could be shorting this one. You're not going to make a whole heck of a lot of money, though. So this would be more of a put spread. It's just, you can see what the percentage returns are. They're not all that great. So this chart, as you can see back in here, it really hasn't moved one way or the other. The short Qs, you stay long. I would probably use today's open as a stop. Myrna, nothing wildly exciting. If you're short, you can stay short. Look at your hanging man that failed right at the 200. All right, so right now the assumption is we're in a downtrend, obviously. And notice what they did today with about an hour. I think it wasn't even an hour. With 45 minutes left to go, they were up 140 points. And then you can see they dropped it to down where they closed down 85 points, which is still just an indication that we're not, there's no bullish sentiment remaining in this market. Or Caesars, stay short. Yes. ATER. Stay short if you could short it. I guess if you got in it short, you can stay short. I can't imagine they would let you short a $3 stock, but they're doing a bunch of stuff. All right, everybody. The NASDAQ was up 114, but notice that it wasn't a strong 114 because they opened it here and they closed it down here, halfway down. All right, so we will see everybody bright and early tomorrow morning. We'll see you then.